All right, guys, we are back to not as good as a background, unfortunately. It's way too windy out today, so I'm doing it indoors. I got my setup up here so that now I can do a little bit more of extended stay instead of just the weekends, because clearly in this market I'm not trading from a laptop. It's just not smart. So I wanted to kind of discuss a little bit about last week, discuss a little bit about what's going on, as well as just a couple, trading notes like usual, and then we'll get right into the scan. If you don't make it into the scan portion of this, as always, just make sure you focus on the front part of this Sunday video scan, because that's where all the good stuff is. And it's what I'm going through. It's what you're probably going through. It's what's good. It's what's bad. It's what's working. It's what's not. And I think that that's the biggest takeaway. As I say, Mondays always, it just depends on what we have for setups coming in. And I think we actually have some pretty good setups this time. However, I think that you can take a lot away from the first, 10 or 15 minutes that I do every single day or every single Sunday. So with that said, if you do make it through the entire thing, which I think you should, last week you probably had some really, really great trades. We had some crazy swing trades. I'm not a swing trader per se. I do trade an IRA for my swing account where, I kind of put bigger picture ideas in there. Anything that I'm thinking more than a day trade or more than a scalp is what I consider a bigger picture, whether that's a few hours or a few days or a few weeks. That just really depends on what the trend is doing and if it's actually doing what I thought. This week you guys saw on Twitter, sometimes I put some cryptic ideas out there. Obviously they're not cryptic in the room, but VVPR was a big swing trade for me. I was, long. I was a little bit early, probably about 20, 30 cents early on the entry. But like I said, I took off the day trade as a loss. I had an entry on it, and I was thinking that it might squeeze out that day, but it just didn't. So I moved on that portion. However, I had the swing trade, which I was looking to add in. I posted the levels on my scan. I posted the levels every single day in the room where I would be scaling as each level confirmed. And I think that should be one of the biggest takeaways from scan this weekend, because that's really what it is. You want to be proven right. You don't want to continue to add and add and add and add into a loser, because then you have your max risk when you're max wrong, right? You should have your max risk when you're max right. Add into that winner. So think about that, especially when you're bagging something, you're adding and adding and adding. That's not what you want to do. I know that it makes a lot of sense, but for some reason it's hard to do that. It's always easier to add into a loser, average down. That's what everybody does. So think about that when you're swinging stuff. Think about that when you're taking trades. Stop adding when you're losing, right? Because your max risk is when you're down the most. You want your max risk to be when you have the best padding, when you're on the right side of the trade, right? So, this week I was thinking about what I was going to talk about, and then I realized we're already almost into September, right? We get the last day of August tomorrow. It's 31st, and then, we're right into September. So we have September, October, November, December. 4 months left, right? And I remember Sanlucci, who is the man, I remember him one year saying, screw all you guys with your New Year's resolution ideas. Like, all it is an excuse. New Year's is an excuse to delay until New Year's, right? Start today. Start this weekend, start Monday, start this week, right? So if you look back at this year so far, which has flown by, we're 75% of the way through. And it's been my best year ever. It's been my best months ever, best days ever, consistently. There's a lot to be proud of. There's a lot to be happy about, but there's always ways to improve. So the challenge this week is, what changes will you make this week, not into 2021, Not for New Year's, not for next year, not for anything. Tomorrow, what changes are you going to make? What could you improve on? Think about it. What could you improve on to make this, if it's your best year ever, even a better year? Or if it's not your best year, how could you improve for the next quarter to make it the best year ever? Think about it. What names or setups should you avoid? Okay, so I've always gone back every single year and I look at 5, 6, 12 days and I say, hey, if I had just cut those off, I'd have a lot more money, right? You could probably go back to 4 days, and at least for me, and that could be 7 figures of dumb mistakes that I could have just avoided, moved on, and done something differently, or had a max stopped at a certain price. So I think that that's very important to kind of think about. And then what names should you be more aggressive with? Not reckless, but aggressive, right? Those A-plus setups that we talk about. Those times when you know that 90% of the time, this is the right trade to risk on. Now, don't get me wrong. A-plus setups have their own risk, right? Because you could be wrong. But that's where risk management comes in that we talk about all the time. Where to be wrong. At what point are you wrong on the trade? That should be where your focus is. At what point are you wrong? That's when you move on. I don't always go in and say, I'm risking X. That's it. It might be, I'm on the right side of the trade, and then it starts to rebound. And because it's rebounding, I realize I am wrong on the trade. I did not expect that. That's not what I was thinking. So at that point, I know I am wrong. Or it might be something like even Tesla or some of these other crazy names where you're going to go for a ride on a partial position. I don't size into a loser. However, you cannot nail Tesla without risking, you have to have some type of big risk parameters. When I did 100, 120, whatever it was per share on Friday, you can't do that without risking 20, 30, or 50 bucks a share on the initial entry. Get a feel for it, scale in, and let it work. And it's most important not to get too aggressive before key levels break. So you want to be, once again, proven right. So what names could you be more aggressive? That's the fourth thing to work on. So again, what changes will you make this week? What could you improve on? What names or setups should you avoid? And where could you be more aggressive to really exponentially grow those good trades, where you're good at? And not everybody's A-plus setup is the same, like I talk about every single week. You could be a phenomenal long bias trader, and every time X happens, you've done really, really well. So why wouldn't you step it up a little bit, right? And then every time something else happens, you lose. So why wouldn't you avoid that? So that's the goal of this scan, at least, to try to get you guys thinking. Stop waiting until the new year. It's sad to say, and yeah, summer's almost over, which is unfortunate. However, there's a lot of trading left. There's a lot of the year left. And you can, if it's not already, make this your best year yet if you make the changes today, tomorrow, into Monday, and then apply them the rest of the year. So this is the year to do it. These are the opportunities that are out there to really make this a game-changing year. And then one thing that I would suggest everybody do is to quickly be able to answer, what is your process? If I just was in an elevator with you, I said, so what do you do? What's your process? You'd probably sit there and be like, well, I trade stocks. I short stuff that I think is going to go down, and I get long stuff that I think is going to go. It doesn't really make sense. So within 20 seconds, you should be able to know exactly what you do. You should be able to know exactly, what is it? You come to market, you take advantage of overextensions on parabolic moves and market inefficiencies. I mean, that's what I do. And, I take advantage of moves post blow-off moves, post-exhaustion. And, also, obviously, I do the long side. But you should be able to answer that quickly. If you can't, you should redefine what it is you do. You should define it and know, hey, and even write it. right? This is what you do. And then that way, that's what you start trading all these 20 different names and you have mediocre results. You go back to why you do this, and it's going to make you a better trader. So, couple market notes. First off, if you are a member and you're not logging into the morning broadcast, you are missing out. That is where I go over everything. I can only type so much of my ideas, right? And kind of prepare the room and all that kind of stuff. So I go over key levels. I look left. I draw out the lines at times. I talk about how I set price alerts. I go over every single thing before I do it, as well as going over anything that I'm already in or planning on taking and where. So, just like we had a couple pre-market on Friday, it was phenomenal. But if you weren't on the call, you might have missed it. I can only write so much. Yeah, I write it, but maybe some people just don't understand it when it's written out. So make sure you log in. You can also just do audio if you wanted to. Most important, I think I talked about this last week, but know when to pull back a little bit, right? And also know when to show up. So for me, Monday was kind of like a little choppy. I could feel myself getting a little bit loose. I talked about this last Sunday. And then Tuesday and Wednesday, I was, up real nice and then gave back a decent chunk. And I'm like, all right, what am I doing here? Like, I got to just chill out and wait for my setups because now I'm just kind of trading to trade. And then all of a sudden, Thursday and Friday, it was right back to everything that we've done all year. And A-plus setups galore, major opportunities, NEO, Tesla, I don't even remember what else there was this week. There was a lot. But point is, hands off when, you're not confident about stuff. For me, it's mostly hands off the opening. I always look for stuff right off the open because that's usually where I perform exceptionally well. But if I am wasting time and I'm wasting my keys, I'm pushing buttons and focusing in on all these different names, think about everything else that I'm missing, right, from here. I'm just focused right here. And because of that, I'm missing all these different opportunities that could have been a lot easier, could have been better, because I'm just trading to trade off the open. So when it is not your style, hands off, wait, and they will come. And, I expected to not really trade Wednesday, Thursday, Friday, just kind of, whatever, let this market go straight up. It's hard for me to chase. I just can't do it. If I do, I'm chasing small size. But instead, I waited, and they came. And I think that that's what's going to happen the rest of the week as well. We've got a lot of good stuff. We've got Apple and Tesla splits, and I'll get into those in a moment. But other than that, VVPR, big swing. There's also, I have a couple other swings going that are working really, really well. But, that is a key level kind of play. That was something where, I saw the exchange of shares. I saw the trap. I saw them walking down, basically a nice breakout after hours, walked everybody down, 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 down. Another breakout, walked everybody down, down, down. But they held key levels every single time. That's what we want to see. And then as it broke those other key levels on the way up, we started to have the nice speed up into the close. So my goal early in the week was $7 to $10. We hit over $10 on Friday after hours. So I'm out of the position. It very easily could go a lot higher. It's a very thin float. However, I just kept on hitting the sell button. So I ran out of shares. I had about a third or a quarter left into the after hours. I sold some at 880s and then 980s on the rest, I think. 985. So either way, great idea and spelled out perfect in the room and on scan. Setup that has been working wonders. I would encourage you guys to go check out INVE, ORTX, and REDU. INVE is more of like a kind of an ABCDer on the daily chart. And I can do this when I do the scan portion as well. But ORTX and REDU, these are all huge movers, pull back, consolidate, and then they break over that level and they continue to go. So that's been a great setup that's working well. And although I know a lot of people think I only short, it's probably 60-40, 60 short side, 40 long side, maybe even 50-50 at times. But the difference is, I would say the size is 80-20, right? So I'm much more confident on the short side. So although maybe I would take 5 or 10,000 shares long, I would take 50 or 100,000 shares short as kind of an example, maybe more, and maybe even less on the long side. So let's see, Apple and Tesla split. I'll start it and then we'll get into it. So I don't really have a game plan coming into what happens tomorrow, right? So we're going to be in the 400s range on Tesla. We're going to be in the 125 range on Apple. So they all offered great opportunities this week. What I like about it right now, and the reason that I'm interested, is because it's taking out, not necessarily, there's always going to be market risk, but there's less of the outlier risk, right? Because there's so much uncertainty right now that it's just kind of jumping around, lots of emotions, lots of opinions, lots of price targets, lots of who knows what, right? And with that gives me an edge as a day trader. So I want to be able to take advantage of whatever happens. I will be, kind of seeing how it reacts. I will, have a game plan by 9 a.m. tomorrow morning, 8:50 on the call that we do every single morning. But for me right now to talk about it, to say if it does this, I'm going to look for that, I can't do that yet. However, I want to be familiar with it. I want to see what it does. I want to have hands off pre-market. I don't want to try to be a hero and try to nail the short or the squeeze or whatever. I want to see how it reacts. I want to see the volume come in after open and then react from there. The last two things. Cody boot camp is complete, and so it was great. Really, really great feedback. I am going to do another webinar, a bonus one, for everybody that participated in that. So I'm going to do that on Tuesday, as well as, obviously IU members are welcome. So just a heads up, because at some point we may do that again. We may do something similar. Maybe we do it with a couple different guys. Maybe we do different types of sales. But when we do limited seats, they are limited seats. I know some people say, oh, there's only X seats available, and then they sell out 4X, 10X, whatever. But we are doing limited seats because we want you guys to get the IU experience. And if we onboard a ton of people, there's a ton of demand right now for trading as is, right? So there's just a ton of traders coming anyway. But when we put our name on something, when we do something like this, we want it to be of IU quality. We want you guys to have a good experience. And Cody's talked and reached out and emailed everybody one-on-one. So we can't do that if we just take on however many people decide to show up. So that's why we did pull down that page after the number was hit, and that's why it was no longer available. So the point is that we want to keep it condensed and do it every now and then, so that people can come on, they learn, they get a feel for exactly how we trade, what's going on, what to expect, get your questions answered, and then away you go. You can now understand the room, you can now understand the lingo, you can now understand how we trade, and you're free to fly. And so that's why we do it in that manner, and it worked out really, really well. So I was really happy to see all the feedback that we got from people. But like I said, for those of you guys that did dedicate to trying it out, that was the first time we've ever done it. I'm going to do another webinar this Tuesday. So I'll put that information on Scan and let the room know as well. So let's get right into the market and what's expected for the week ahead, and we'll go from there. All right, so this is the second part of Scan. Before I forget, because I will, we are going to do Camille, and I'm not even going to try, I'm going to say Zeborg, but you got a little squiggly over the I, and I don't know how that works. So I'm going to just call you Camille, which I may or may not have even gotten right too. So, but just like this person said, they were commenting about the speech in front of in front of scan. And I think that's important. You know, understanding, getting a feel, getting a vibe for the week ahead, what the current market is doing, and being able to, you know, pull some key takeaways from that. As you guys know, we give away t-shirts every single Sunday. We give out Momo Traders once a month, and we give out a free month of chat once a month. So next week we'll be picking a free month of chat, and all you got to do is write your biggest key takeaway and any other comments. But, you know, what is it that you took most from this scan? And sometimes it's the looking left concept. Sometimes it's waiting for key levels to break. Whatever it may be, like I say, the reason why I like to see the comments and I like to get the feedback is because I want to know what it is that gives you those aha moments, because that allows me to help others in our community, and it allows me to help you guys on this video. So if you guys have this big aha moment, then the next Sunday I could probably expand on it and, you know, get a little bit more deeper into why I am looking for certain things on certain setups, or, you know, things like that. So anyway, Camille, go ahead and email me, webmaster@investorsunderground.com, and maybe we'll do one more. Why not? Tom Markham. That was easier. Still probably got it wrong, but email me as well, and we'll get a t-shirt out to you as well. So let's get right into it. So we've got Tesla, if I can type it right, TSLA. We've got Tesla, and we've got Apple. Now, like I said, they're going to be the 400 and the 125 range. There's no point right now to have a game plan that says, hey, if it goes to X, I'm going to do this, or if it goes to this, I'm going to do that. However, let's see what happens. Let's see how it reacts. Keep in mind that if it ramps up $5, $7, $10 off open, that is a huge move, especially on Apple, right? That is a huge move. So keep in mind, keep that, you know, think about that. And, you know, just kind of keep in mind that that's a huge move on that name. $1 trillion market cap on Apple, or $2 trillion at this point. $500 billion on Tesla. Not that it matters, but, you know, think about that. So if we do have some type of move on air, I will be reactively trading that. You do not need to find the top. You guys have seen with Tesla key levels. Just to give you like a quick synopsis of what I do, the level that I wrote in the room was 2270s range, as well as if you just kind of draw a line, I mean, you can see what levels need to crack. And just like I write in the room, you should assume that whenever it flushes out, it's going to come right back up over it and potentially hold. And if it does that, it always is good to pay yourself into those flushes, at least some. Assume it's going to hold. And then when it fails, you can always add more and more and more and more. So the other thing too, you can also look left over here, and you know, you can see these outlier flushes. I mean, they pretty much held the same levels, and you had a lot of support in this range right over here. So that's what I'm looking for. I'm looking for these types of, you know, spots where the tables start to turn, where the longs start to get on the wrong side, where the shorts maybe post-exhaustion starts to unwind, things like that. So hopefully we continue to have some good opportunities with that. Then we've got VVPR. Now VVPR is insane. Great swing trade, great trap all week. You know, like I said, it did a perfect trap this day right over here. And it actually started after hours. That's what originally got me interested in this. So we had that huge move, and then it faded back all the way, right? So everybody just goes and shorts because, you know, why not? You know, easy fader. Next day comes back, easy fader. And the fact that it started to come back this day is what intrigued me. I was like, wow, that's weird. That's weird that it came back. And I started to watch the tape. I started to watch the action, and I saw huge buyers in this level. And whether or not that was just shorts getting kind of out and rotating out, or if it was a major buyer, that's kind of up to you and your opinion and what you see. And so that's why I think I was a little bit wrong at first, thinking like, okay, I see the buyer, I see him in here, but we need to kind of come back and retest this support. So we did, and obviously it never broke. It continued to hold at this level. Once again, draw some lines, help yourself out. And you can see that once it got over that prior resistance from the 24th after hours and the 25th during the day, you can see that this resistance now became support. And when the resistance becomes the support, it starts to open up and give us some good opportunities. So keep that in mind when you are trading these things. That one worked out perfectly. Fortunately, I was in it. Fortunately, I had a great trade. NTNX, another huge trade. Big breakout, pulled back some, big move all day. I actually tried to get long. I made a little bit on the long side, and then I shorted it into the close, just anticipating a potential, pullback right before close. I did not participate in this part of it. I thought it was only going to go to about 27.70s or so. So when I come to the market on Monday, I'm going to be looking at basically this 27 kind of 80, 27.70 level. Just draw a line. Again, make it easy for yourself. So if you are shorting this stock, you'd probably want to wait for that to peak out, right? And then you can use 28, 27.70s as your guide. If you are trying to find the top, you could be fighting it all day. And we actually had Roku as well. Very easy to draw, once again, the line. There was one over here that we're talking about, basically 175 level, and then you can kind of see that it was support level right over here throughout most of the day, and then it started to peak out. So there wasn't much of an opportunity because where is the key support? Right there. So if I'm going to be looking for a short, I want to be looking at under 171, basically 30s, 171.50s. I want to see that starting to peak out. If I am trading this action short, which I did, I need to make sure that I'm covering into flushes. Otherwise, you end up getting pre-exhausted. We talk about getting on the front side of the move and pre-exhausting yourself. There's incredible trades. I actually had a really good trade multiple times on Roku by taking advantage of the squeeze, the kind of the overextension, the exhaustion move, and then it slammed back down. But I was there. I was there on the pullbacks. So it started to add up very, very quickly. And if I was not there, if I tried to be a hero, if I tried to find the top, if I tried to say, it's up too much, it's time to fade, I wouldn't have captured that profit. So always keep that in mind. Draw a line under the recent support. That's going to give you the conviction to be patient, or it's going to give you the reminder, hey, don't forget to cover. You're on the front side. So that's it. NTNX, like I said, basically, I'd be looking for a weak open. Let it come down, 27.70s. If it starts the base, I'd play the red to green move for 28, 28.50, 29, whatever. If we gap up 29, 30, some type of parabolic move, reactive trade for me. I mean, that's a huge move. So I would be looking for a reactive trade, fade, not necessarily all day, but just take advantage of that 50, 80 cent pullback. XPEV, recent IPO, I mean, just kind of crazy. Price a little bit lower. My friends all think that it's, half of them think it's because of the players. I think Baidu folks are involved on this one, not Tencent, but regardless, it's a bloated pig, and that doesn't mean anything. So is NIO, right? NIO. Beckett, leave it. Can't trust the dog. Be quiet during these things. So, higher the better. And ideally, we get some type of unwind. Like I said, it's a bloated pig. I don't want to get too confident in the fact that it's a bloated pig and it should fade, because it doesn't matter, right? NIO, we just saw. So anyway, with that said, looking left, pre-market, we talked about this right over here. So I always look left, get a feel for where I should be entering, get a feel for what would be a good entry. It's not always going to be to a T. Sometimes you got to leave room to exhaust out. come back, fail follow through, and then get that trade. That's exactly what we had. The reason why I was looking at this level, basically 24.20s, was because, yeah, you're going to have that big move off the open, the IPO, but where does it peak out, a couple times and fail? That's the number I care about. So that's why I was assuming that we might have some trouble here. But it doesn't mean we can't go back and retest the highs. So I don't mind starting into it with a wide stop. Had I not started into it, I would have missed the trade. But once it starts to peak at that level again, that gives me the confidence, and that's where we found that trade on Friday. Beautiful unwind, really captured a good portion of that move. So higher the better. Immediately I look left. I think VWAP 23.20s, something like that. Look for the blow off. EDSA, higher the better. Tough one to trade. You got to be there. You got to, watch your size. And obviously, you couldn't really do any wrong unless you were chasing a breakout here. So, if I was to get long, I'd probably be looking dips for 780s or 8s. Otherwise, over this VWAP level, it could really open up. But if it doesn't show up, I'd probably fade it. And what I mean by that is if it just kind of fades off 780s, 8s, then I would probably get interested and have some type of short going. But for me, given Tesla, given Apple, given DraftKings that'll go over next and the rest, this might just be, off radar and don't even trade it. DKNG, immediately looking left, just draw a line, go right back to, where I had some trouble over here. You can pretty much see 37 was a key level. So ideally we get 37, 37.20 kind of push and pull back. If you look at the daily chart, it looks like it's getting a little tired. There's been, huge buys on all the headlines that are positive, and then it kind of pulls back on the negatives. I think at this point, it could really unwind. And then the only thing is you just have to be cautious of these headlines that pop out. So I would just be fading the trend as long as it stays heavy. However, if we run into a situation where it starts to rebound and stay firm, then I just have no interest in fighting it. Other than that, RNET, only a couple more. And as you guys know, my main watches are only the top 3 or 4. These are just, I've tried to cover all bases, hit all different types of traders. Some main watches, some short side, some long side. And then I have a section, if you click through on the description, check out the link. I have some other ones that I set price alerts for. It's very important to set price alerts because that's where you're going to be able to take advantage of all of that kind of stuff. So with that said, you've got, I've got about 1, 2, 3, 4, 5, 6 left. And the rest of them I'm going to be setting price alerts for. So what we have is we have RNET. RNET, very nice breakout. You've got this 450 level. And so that's where I would have set price alerts. But I missed this trade. I was interested in it because of this big volume day. Started to set up, started to base, and then break out, right? So in a situation like this, I like dips as long as the trend starts to hold. So I'll be looking at dips versus basically 480s 5 for a potential breakout continuation. I want to join that trend. Other than that, we've got ORTX. ORTX, very similar. I was talking about this move with REDU, and I think I have that. Yeah, I have REDU, same trade, same setup. We've got that huge move, huge volume, pull back, let it consolidate, hold a higher low, and then break out. So I'm watching REDU as well as ORTX for the same kind of trade thesis. So we'll see what happens with those, but right now I have a position in ORTX. I traded this first move, you guys probably saw, and then had sold some into this. And then I started to re-long it, rebuy the dips because it started to hold trend. And at this point, maybe it exhausts out into the 7s and then comes back. Other than that, I have 2 other swing trades that I'm just going to have on the member scan. They're working really, really well right now. But sometimes these easily can get crowded. So I'd rather, sometimes my opinions are contrary to, like VVPR. There was a lot of shorts on that. So I'd rather it kind of come by surprise and squeeze everybody than everybody kind of start to think about my thesis, my idea, and like, oh, maybe I shouldn't be short because it might not work as well. So I have two other ones that will be on the member scan. One that is in the 40 range that I've been swinging since 28 and 30. And then one that's in the 6 range that I've been accumulating tips. So other than that, KIRK, and the reason I didn't, they're lower float, so I don't really care to, I don't want masses reviewing them. KIRK. KIRK was one that has been beaten down. We were watching this one. This was a price alert one. And the goal was to fade it. Price alerts, set them. I missed it. It cracked the same day as APPS. However, it continued to go down and down and down and down. So at that point, I started to look for them to flush it out. And then the next day, flush out and rebound. And that's exactly what we got. You start to look for the wicks. So I got long, not a big position, but I got long, and I'm thinking that it could potentially go back, 859, and then fade back off. But I'm just playing that rebound. A lot of times you see these huge moves, pull back, consolidate, rebound, and then, fade off. So that's just what I'm looking to take advantage of. I've got a couple restaurant names on scan. Ruth, Den, Play, Cake. Those ones are just, set price alerts. I think we're going to have a trade just like we had on airlines and cruise lines. Staying familiar, I've got a couple other ones with price alerts. Roku and GCI, a great daily chart. So I always try to scan things and I plug it into the price alerts at IU. Like I'd say every week, we have price alerts built into the chat room. So it will alert you as soon as it hits. The best way to do these kind of things, you're not going to trade this trade every single day. Everything you see, you can't trade. However, you can say, all right, I would trade that at X price. Put it in your system. Put it in there to alert you when it hits that price. That's what I do. And all of a sudden, it says, hey, Nate, it's time to trade me. And I already remember what my game plan was. So you do the work now. You set it up for later. It's going to tell you when you need to know. So that is the beauty of price alerts. That's the beauty of IU. But again, have a great Sunday. Thank you guys for watching as always. And if you have any questions, leave a comment. And again, if you leave a comment, your biggest takeaway, we are doing the shirts again. We are doing a free month of IU next week. And we are doing, last but not least, the Momo Trader book. So that's it.